just about
For that
13%.
insight, let's move forward and let's talk about Muthoot Finance. The demand for gold loans seems to be on a rise. So let's chat about the preparedness really that the company has to cater to this higher demand uptake and the outlook, of course, on asset quality and funding availability going forward. Joining us right now on the show, George Alexander Muthoot, MD at Muthoot Finance, joining in the show. George, hi, morning, good to have you on the show. You do expect higher demand for gold loans at this point in time when gold prices have already escalated. What keeps you so optimistic about it?
Thank you. Good morning. I think our branches are slowly getting opened. As of date, about 80-85% of our branches are opened all over India. It's in the last 3 days actually that more and more branches are getting opened. So as the branches are getting opened, the customers who have been waiting to come to the branch for the last 35 to 40 days, they are just starting to come to the branch. Of course, there are some restrictions on how many people can come, etc. And travel also is not that easy. But still, we see people starting to come to the branch. They are paying their interest on loans. Some people are taking back their loans. People are taking new loans also. Now, coming to the demand, so I think by the end of the month, when things are little more normal, we should see real upsurge in the demand for gold loans. That's mainly because availability of funding is a problem today for especially the small business, small traders, and even some individuals. And gold loan can play a very good part in that demand and maybe putting more purchasing power into the hands of people. That is why by the end of the month we should see big uptick in demand.
Sure, theoretically I completely get your point, but don't you think as the economy gets back to full lifting of the lockdown, banks as well would begin lending, and thereby you would again then see that rebalancing and a dip in demand come by for gold loans?
Yeah, no, see, just before 2 months, even just before 2 months, when the things were all very normal, we were seeing a good growth in our business. We actually were seeing a growth of 15 to 20% on the gold loan business last year also. And that is what we will be seeing after the banks lockdowns or after the banks also become normal in their loan disbursement. But there are definitely a good set of customers, even when the banks have been working normally, they were unable to get quick and easy bridge finance like loans from gold loan. That is why they have been using gold loan prior to this lockdown also. So once the lockdown is lifted, things are normal. The usual demand for gold loan, which we saw in the last couple of years, around 15 to 20% AUM growth, I think that should come back to normal. What I am saying is now in the foreseeable future, in the next 2-3 months, when banks are probably a little reluctant to give to banks, etc., we should see a little extra demand. That's what I was trying to say.
Okay, so what is going to be the growth strategy then post-COVID? Because the subsidiaries contribute nearly 12% to the gross loan assets. Will this share now come down, and can you share with us some of the growth forecasts? Have they been slashed for FY21?
Yeah, I think today the subsidiaries constitute about 10% of our total gold loan business, and that is the vehicle finance business, the microfinance business, and also the affordable housing. In all these 3 areas, definitely we will be taking very calibrated steps and also cautiously only lending. Probably these other than gold loans will play a less important role in the next 1 year till things normalize. So probably next year we will be definitely going slow on the microfinance, vehicle finance, as well as the affordable housing, because this is not the best of times for these 3 sectors. But since we have adequate demand on gold loan business, we will certainly put more efforts in the gold loan business going forward for next year also.
Okay, fair enough. Give us also a sense then as to what the outlook has been on collections in the month of April. Digital as well has been gaining a lot of traction because social distancing is now going to become the new norm and the new reality. So do you think that we will see a greater reliance on the digital channels rather than branches? Are you investing a lot more here?
Yeah, we are investing a lot on digital channels, but all said and done, the digital channel can be used for payment of interest and also payment of principal. But for physical deposit of gold in the branch at the time of taking their loan and physical taking back of the loan from the branch, people will have to come to the branch. So some visits can be avoided, especially the people who pay interest. So today, a good number of people come to the branch to pay interest. So we are now mapping them to the bank account, and their bank accounts are being mapped because we had quite a lot of free time with our staff last month, and we have been able to do that mapping quite well. Earlier, we were doing only a very small portion of mapping. Now, more and more accounts are getting mapped. Once these account gets mapped, these customers can pay interest or remit their interest, remit their principal, and also take an additional loan on the gold which they already have through the online channel. But it will take a little bit of time because our customers are, the average ticket size is only 40,000, so you can't expect all of them to be online savvy or computer savvy, but we are trying our best and we are seeing good results. Actually, the number of people using this is actually going up day by day. But finally, it is not a full solution that gold loans can never fully be done through online. As I said, interest payments, taking a repayment part payment of the loan or taking up a extra money on the gold already there, yes. But for physical, what is today, we have to think something else also, whether customers can avoid coming to the branch to bring the gold. That we have not been able to sort out as yet.
Sure. Lastly, what happens to your asset quality? Because, given the risk profile of the borrowers and the way it's deteriorating, do you expect higher delinquencies as well as NPAs then going forward in that case?
Oh, no. So actually, today our loan to value, the loan to value is the value on which the 100 rupees the value which we give as loan is capped by RBI as 75%. But today in actual terms, the actual loan to value is only about 53%. That means the price of gold has gone up. So we have our loan to value or outstanding is only 53 to 54%. So we have an elbow room of 47% on the collateral. So we don't see anything with regard to quality of the asset. Probably some customers may take little extra time in repaying the loan. But then our loan period, although the loan period is 12 months, the average loan tenure is only 4 months. Probably because of this, the average tenure may get extended by a month or two. That's all. But still, we'll be well within the NPA norm. So, as far as gold loan is concerned, where the collateral is very liquid and also it is a pledge that the collateral is with us, we don't see any issue with regard to quality of the assets or the interest collection.
Sure. Good to have you then on the show. Thanks so much, George, for taking the time and speaking with us so candidly about how business is going to be for Muthoot Finance post-COVID. That's the word from Muthoot Finance, but let's take a look at what the market is up to. We've actually gained ground, so about